Good afternoon, everyone, and welcome to the New York Wrap. Really, just a setup before we look at various levels or where we're at or what's excuse me, transpired since the New York Open and Primer ahead of Asian trading. As I mentioned, it's generally at this time 2 p.m. Eastern, but it's going to evolve. There'll be some days where it's very, very quiet and you can almost have it an hour before. And other days, depending on economic situations, could push it a little bit later out. If you're with us, and welcome here, it's a new free webinar from ForexAnalytix. If you're with us on the European crossover webinar, and that's available, to the members here with ForexAnalytix, that takes place at 4 a.m. Eastern. And then the recording is made for the same members that's available before the New York Open. And then, of course, it's open to everybody else a little bit later on, several hours later. But if you were with us, our whole premise on the show was we were looking for a break in the S&Ps. Let's see here. And the resulting factor of said break. Okay, so we did see these S&Ps break down. We were looking for that. We talked about it. We said, hey, we're going to, we may not see this come to fruition, but our bias chart is going to be reflective of that. We're going to be looking for potential breaks due to that. And I said, you know what? It may not come out, but you got to lay yourself out some scenarios. And one of them was going to be is, we talked about that. We said, hey, nothing's getting any better. We even mentioned we were reading one of the stories here, and we do cover a couple of stories when we do the webinar to kind of give us kind of like a lay of the land. What's the feeling out there? And so one of the things that was mentioned in the story was it was stating here was that the situation with China is looking like it's potentially going to morph into something even larger. They're talking about, technology wars, technology type Cold War. And we know things aren't going well, but at some point I was thinking, the S&P is always trying to pull lower. This thing's going to break. It's probably going to break lower. And I go, and it's, whether it happens on Friday, it may very well even happen today. And so we were positioning ourselves and we say, hey, look, that's going to open the doors, going to allow the dollar to end up probably pushing higher. Okay, so keep ourselves positioned for that. The euro is going to go in and push lower. We're already looking for a lower euro anyways because of the weaker PMIs, but we knew how much further can we go in and go push. So a couple of interesting developments. We did get the euro to go in and push below that. We're looking at our bias chart from this morning. We had 1124 and 1080, and we said, hey, look, if things get really bad, if we get and the key thing was if we get a daily close below 1130, that's going to open the door for a move to 110 with a pause at 1080. But it's going to be key if we get a daily close below 1130. Well, we saw the euro finally start to push back. That pushback coincided with our resistance level here on the dollar index. This has been the resistance level for the last 2 days, 98.33. And I was tweeting that one way, not tweeting it. I was in the chat room. Several of the guys and gals were actually exiting out of their euro shorts, but right around, I think it was at 11:15-ish or so. And it was actually at the same time that this was hitting our bias chart resistance, which was 98.33. And you can see the dollar index topped out at 98.37. Not bad, off 4 ticks. As Dale likes to say, good enough for government work. And we saw a pretty good pullback, more than what I would have thought, but we've seen a pretty good pullback from there. So it turns out that bias chart resistance for the dollar index was, appears to have been somewhat formidable. But we did go in and see this pullback, and we've seen the euro really come back. And I think some people were stepping in ahead, trying to short it maybe a little bit too early, because what you have to do, and I was going to mention here, is you have to look at the structure of the market. And so when you think about it, let's move into the euro here on the daily. This market has been about as sorry as all get out. I mean, you couldn't lift this thing with a bottle of Viagra. And like I said, just trying to inject a little bit of humor, not foul humor, but it's the truth. You could, I mean, there was nothing here, absolutely nothing. And it just kept dropping and dropping and dropping. And we knew, hey, you know what? If we get it, you know, we got support 1130, our bias chart, we'd actually pushed it down here to 1124. But you know what? If we get that daily close below 1130, you know, it's kicked grandma down the stairs. This thing's going to 110 with a pause at 1080. Well, at the same time that the euro was dangling around 1115, venture low was 1108. The dollar index was right there at 98.33, our bias chart resistance, and just started kind of struggling and try to move up a little bit more. And boy, we saw the euro come back and bounce back. And my thoughts here is, because some people try to jump in a little bit too early to short, I think we have a good area here. I'd mentioned there's this level here, because initially I was saying 69. I said, well, wait a minute. This market's coming back really strong. We had a strong 2-hour close in here. And look at this. We were developing up a little pin bar here. So I thought to myself, I go, you know what? The resistance is going to come in here, which is 1180, 1179. And then if we did a fib, she got the 50% right there at 1185. It's actually 1186. I think Amir stepped in and took some here at 1182 for short. But that's a pretty good strong daily close. So if we get it, we'll get it. It's a strong defense too, because look how sorry this thing's looked. It's been pretty bad, but boy, did it's come back. So the market's fairly oversold. We could get a little bit further push. We'll see what transpires with all this. But there's the deal here with the euro. Now we've also seen the yen. That's another market we talked about this morning. And once again, it was all on the premise if we get a breakdown in the SPOOs. And we certainly did. And so we were looking, our bias chart was supposed 983. Well, the wheels are falling off the caboose on this thing right now. But we had turned lower. Now, when we're looking at the resistance, we said, hey, we may not even get anywhere close to even this. And certainly a lot of it had to do with what was going on with the S&Ps. As we started to break down, you go on to, go to the safe haven assets, whether it be the euro or the Swiss. We saw that the dollar could be one of those. And initially we did go on and push, but we saw the euro try and fight back. The Canadian dollar, well, we had our bias chart resistance for 3504. And we just have not been able to take out that elusive 3504. And look, we made up to 3502, missed it by 2 pips. I thought we might be able to, yesterday on the initial run, I was talking with Steve, I thought, hey, this would be nice on the dollar CAD. Let me get rid of this. On the first look-see, which was going to be that 34.46 on that first run. But the market didn't make it up there. And then we just sat there for the balance of late in the day. Look at that. That was in the evening. This market had a chance to just digest. So it kind of, had gotten past that. We start working higher. And next target is going to be this 35.04 that we have on the daily. And we kind of ran out of gas here as the dollar weakened. And we certainly had the ability to move higher as crude oil came under quite a bit of pressure. Obviously, to a certain extent, linked to what's going on with the S&Ps. Moving here with, we'll go take a quick look at the cross rates. And we did get this dip here in the Euro Aussie, but it's still holding up like a champ right in here. We did go in and dip back, got into what, 61.72. There's still the potential for this thing to break lower, but it's holding up very well right now. And the concern we had too was the Aussie may feel more pressure if we see an equity pullback. Although in the longer term, longer scheme of things, the euro, once again, had it broke and got a daily close below 1130. we'd be looking, as I said, first step would be the 110 and potentially push lower. And I think that's why people are quick to try and jump back in on the euro, but give us some opportunity because it is pretty oversold. So it doesn't mean like this wouldn't mean that this market can't stretch a little bit further. One of the other pairs, and we got to get to that too also, and you can see here the Australian Aussie yen really pulling back in here. We were looking for potentially even a bigger move lower here with the Aussie yen. I have to pull up the bias chart here. Hold on. A lot of people in the chat room did really well. They've been holding euro shorts for a while though. Not for a long while, but they caught themselves 75, 85 pips. Take a look here. You need, if you have the opportunity, you ought to go and try out ForexAnalytix because, like I said, it's a very supportive chat room. It's one thing to be supportive, but I'm saying people share their ideas, their knowledge, what works, what doesn't work, you know, and constant updates. So just a great group of guys and gals in that room. The trade, the cross rates, the majors. I mean, just a lot of things across the board, including some of the indices too. Let's go back here on this. But once again, this is based on the whole idea that if we fall apart on the S&Ps, we're still holding up here. Potentially, we're looking, if we do see just that, coming down to 74, 73. So we're looking for even bigger break. That once again, a lot of these numbers were going to be all the way through tomorrow because once again, it was on the premise that the S&Ps break down. Well, folks, they're on their lows right now at 2807. And like I said, if this morphs into something bigger, I just don't see where someone would have the thinking that they're going to say, well, you know, I think I'll still hang around anyways. I mean, you don't have nothing to hang around for. So that's why I was thinking that the market was very susceptible. I'm talking about the S&Ps for a pullback, and we were trying to, with the analysis that we had in the European crossover, basically prepare ourselves for just that. And some of these came into fruition, to say the least. Let's go on and move into the main screen. I am surprised how, not surprised, but look how much this yen has dropped down. It was just a matter of like, are they going to try and make one more last push on this thing, which we meant higher? Only thing I was thinking is, God, these S&Ps aren't going to help it to try and make a move higher. Our original analysis on the week was that we'd come up to the 1062, 64-ish. And eventually, after a pause at 1031, that played out. But I thought, will there be enough for one last push? But the S&Ps weren't being very cooperative and wasn't going to see that more follow through. And certainly we did. And here was our bias chart support. But boy, they've really leaned on this thing. Might give you an idea that they're really bulking up on the safe haven asset play. And there might be more in store for these S&Ps. Moving on to the cable. We have reached some value in here. To that. We talked about this here, this 25.98 coupled here with this 25.30. And there's some good value there. And if you think about it, we were talking about referencing this morning. You can see why people are going to step in because at some point you're thinking, hey, look, we already know how this is. I referenced it earlier this morning as a joke because it's like one of those bad B movies, you know, like a B horror flick. You already know that one of them's going to get stabbed. It's just a matter of like, okay, let me just finish eating this popcorn because I know, you know, Joe or Schmo or Janie is going to get, you know, stabbed, and then they're going to catch the guy or they're going to kill the monster, whatever the case is. Bing bang, movie's over. Okay, well, it's the same thing here. We already know that May's out the door. Does it happen this weekend? We're reading here that it might happen closer to June the 3rd. But we're going to go on and see that you know happen. So people already started to position themselves for a good bounce. And I was already saying, hey, when that news comes out, I don't care for 100, 150 higher. I'm getting along with this thing because we'll see a pretty good, decent bounce back. It may not be able to hold it because the next person coming in, guy or gal, is going to have the same problems. But we're certainly going to see a pretty good doggone relief rally coming in here. So you want to keep an eye on these sterling pairs. Let's look over here going into Asia. You know, what kicked off this thing, and we were talking about that yesterday. We thought we were going to get some uh, some pretty sorry looking PMIs. And one of the things that we talked about, that's what we were stressing this morning is we said, hey, look, the PMIs aren't even getting any better. They're still just as bad as they were before. I mean, look at the German flash PMI. Prior was 44.3. It's still going south of the border. You know what I mean? And same thing here in the Eurozone, 47.9, 47.7. So that we were still going to see that pressure. And still, once again, like I said, the longer term outlook doesn't look good really for the euro. Looks like they want to crank up the printing press one way or the other. They're not going to have any choice. And it's just been bad news all the way around. It's nothing you can really hang your hat on. I guess on the French PM market flash PMI, prior was 50. This was 50.6. But coming into Asia, we do have a trade balance at 6:45 Eastern. This is set up for 5:45 for me, and that's going to be for the Kiwi, New Zealand, annual trade balance, New Zealand, see exports, but trade balance that'll going to be at 6:45 Eastern, and Japanese data at 7:30 CPI. Well, so the Dalian's already, or I should say the yen pair is already strengthening, but I think that this fall here, look at it, we're not even getting a nary of a bounce. That, to me, probably speaks volumes, and that's what we were looking at this morning. Say, hey, look, what, it may not happen, but if it does happen, at least we'll be prepared for that scenario, which was the thought that we were going to look for the S&Ps to go on break, and how it would affect the FX pairs. And look at this. So to me, this is more about saying, and might be thinking, well, it's already on its lows. Why wouldn't the yen? I think the yen's just like basically telling you, we're just at the beginning of the show, and we could still see ourselves come off. I mean, if you think about it, what good news is there out there? And that was the whole reason why, in retrospect, someone can say, well, it was obvious it was going to dip. Well, yeah, maybe so, maybe not. But, we thought, okay, let's plan for this thing to break over the course of today and tomorrow, and how it's going to fix these pairs. The real surprise was this year really came back blasting, and that 98.33, the buys chart, dollar index resistance turned out to be quite formidable here, as we really have backed off here on the dollar index here. That's about it here on the wrap. Canadian dollar, we're still up here at this elusive 35.04. We still may try and pull that out, but move into here. This market's poked its head out of the foxhole so many times, and every time it pokes its head above the foxhole, it gets shot right back down. Look at that. So we'll see, but maybe, like I said, if we can get the dollar to push up a little bit higher. This dollar, even though it pulled back, let's not forget, folks, it's still, looking pretty good unless we start to push off. On the euro, as I said, you got to look at things in, one of the things I like to say is it's all relevant. And so, you think about it, yeah, the euro has all kinds of problems, but look, the idea that it would come back and it's defending that 1130, it really opens the door that this could come up here to this 1204. Now, I like that 1185. If you're trying to scalp up against it, catch a couple of nickels. But look, this thing can make it up to 1204. And if we look at it from a bigger term picture here, you see that trend line? That can still take us up to about 1215-ish. So they may squeeze some people that may have jumped in too soon, or might have wanted to hang on to the shorts. And think of it, you always got to put yourself on the other guy's shoes or gal's shoes. 1140, 1170. We go higher. They're like, oh no, I definitely don't want to be short if I get above the 61%. And we go, and then maybe we jump all the way up here. And then maybe we take we start sliding back down the pole. But I mean, you have to figure is when you look at what the market had been doing over the course of the last few days, this market couldn't get a rise to save its life. So it could actually, like I said, maybe we get a little bit more for the short covering, and then that probably provides a very good opportunity from a little bit longer term run for another move down. But look at this. Look at this. It was just down, 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 down. I mean, and they even had like a little bit of an inverted hammer, had like a little bit of a spinning top here. So it was starting to lose momentum. But the defense of this 1130, if you're short, then you have to say, doggone it, they're defending this 1130. I got to get out. And that probably adds a little bit more fuel to the fire. So potentially we could come all the way back up to 1235. But the trend line comes in. I think we got here coming in around 12, in the teens, 12, 16, 17. That's all we got here on the New York Wrap. Thanks for joining us here. The show's a Monday through Thursday, so it won't be here for tomorrow. But once again, like I said, I would suggest you try us out here in the chat room, and I think you'll find a very hospitable trading environment with a lot of great folks in here willing to go on and share ideas and what they're looking at. And everybody trades from different perspectives. Me, I'm primarily a scalper. We have some short-term traders, some long-term traders. There's Amanda. Blake, like Blake said, he's in there all the time. But like here's Amanda, Joe, she's our little CAD queen. And of course, Amanda, she's a sterling queen. But like I said, take a look, drive the car around. I think you'll find it a great site, great complete trading platform. And thanks again, once again, for joining us here on the New York Wrap.